There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Siley. Nice to have your company this Thursday afternoon. Let's have a look at how the local market has fared today. And it has been a negative session despite that record again coming through from the S&P 500 and the NASDAQ. Of course, that 36% jump coming through from Oracle. AI stocks still very much dragging the momentum on the global stage. But today we had quite a lot of stocks going ex-div, and also weighing on the index was the banks. So a bit of a day of profit taking, if you like, but we have seen a lot of moves in defence, and that is on these contracts that have come through from the likes of Ventia, Downer and hang on, I'm losing my mind. ServiceStream also higher, up by about 15%. I'll get to those in detail in a moment. Gold stocks also looking very solid today. But as I mentioned, when you've got the weakness coming through from those banks and ex-div and profit taking, it did contribute to a negative day. It's all about the US CPI though tonight, what that means for the Fed, the cooler than expected PPI overnight, suggesting that of course we will see a rate cut from the Fed next week, but will it be 50 basis points? Phil O'Donoghue from Deutsche Bank spoke to me earlier. You can see that on ausbiz.com.au, and he says, look, you can't rule it out that there could be a big cut coming through from the Fed. Let's have a look at those gold players that are rallying today. And of course, there's some pretty solid calls out there, with Goldman Sachs tipping maybe $5,000 US, ANZ saying 3,800 US. Evolution Mining had a great day. Northern Star up by about 4%. Healthcare stocks, though, this is where we saw some weakness, particularly CSL there, down by 3%, and Sonic Healthcare and Ansell also off by about 2%, and the banks weighing too. Combank now at $167.60, down 0.8%. Here we go. This is what I was talking about, the defence stocks. ServiceStream. Don't say that 3 times fast. It hit a 5-year high, up 17%. On a $1.1 billion defence contract. It will provide land management services at more than 100 sites in South Australia and the Northern Territory, including 8 major bases. Now, Downer EDI also winning a contract with the Defence Department worth $3 billion, shares up 3%. And Ventia as well, it jumped the most since April, awarded 2 base transformation services packages by the Department of Defence worth $2.7 billion. Boss Energy shares, though, tanking. It set a December deadline for a review of its flagship Honeymoon mine in South Australia. And PolyNovo, that was a nice boost too, just on the back of the fact that its chairman, David Williams, is obviously supporting and buying into the company, buying nearly $52,000 worth of shares. It is a company, though, that is going to be taken out of the ASX 200 at that rebalancing, which occurs on the 19th of September. Let's welcome to the COB Jimmy Zhang from GBA Capital, who joins me now. And speaking of rebalancing, there's been a rebalancing of all these S&P indexes, hasn't there, Jimmy? So what's that happening? What does that mean, rather, for the S&P 500 in the US?
Afternoon, of course. We got the September rebalance is always kind of the big one, because as you mentioned, it resets that index weights. So in the US, this time we saw the Robinhood, AppLovin and Amkor being added, while the market access and Caesars being removed. So this will kind of take effect from the 19th of September. And the reason why this is something that's important to note is because of the passive funds, ETFs like VOO, IVV and SPI are now a true $1 trillion force. So when they buy, and they buy in that size, the stocks often rally from the announcement day up to the rebalance date. So we kind of seen that reaction happening in the US. So we saw Robinhood is up about 16%. Lovin about 15%, and Amkor smaller gain of 1.4% to that, and that's largely the index effect work. So investors notice if the passive money kind of flow in, they'll front run it as well. So it's not always a guaranteed winner just because they're in the S&P 500, but the 2-week pop is quite real. So, but the data kind of shows that the kind of effect fades quite quickly. So if you look at over the 10 years, newly added stocks outperformed the S&P by about 1.8% in the first 2 weeks. But 1 month later, they are often underperformed. So it really kind of comes back to the old fundamentals. So whether the company has that earnings power, obviously the competitive positioning, and then the sector momentum. So it'll be a good for the short-term traders out there to kind of take advantage of this, but for the long-term holders out there, you got to be very careful.
Yeah, and I was mentioning, Jimmy, as well, how markets are positioning ahead of the Fed next week. It could be a 50 basis point cut, right?
I mean, that's $1 billion question to ask, isn't it? Look, it obviously kind of depends on, the data's coming out in the US this week as well. But the market has been pricing in close to about, 99% chance that we're going to see definitely a 25 bip rate cut. But the 50 bip rate cut is probably sitting around that 60 to 70% chance. So, look, it's going to be a big surprise. I think what we might be a little bit more concerned of is after the job data comes out this week, if, let's say, it is not what the Fed has expected, and then the Fed is still kind of being quite firm on not cutting any rate, I think that will probably bring a bigger impact to the economy and to the market rather than the 50 base point rate cut. So I think it definitely is a good time with all these kind of factors out there to kind of reposition the portfolio accordingly.
All right, well, let's look at what's happening on our market. There was a really big block trade last night with Dalrymple Bay Infrastructure. And speaking of repositioning, it's one that's going to be added to the ASX 200.
Absolutely. And look, that's along with another kind of really stock that we're keeping eyes on, Drone Shield as well. So yeah, they're getting added to the ASX 200 very soon. But the block trade, this is the second time Dalrymple is doing the block trade. Brookfield Infrastructure is selling it, sold 23% of the stock back in June at a 7.9% discount, which caused a 6% sell-off. Now, this week we saw another block trade at $405 per share, which is another 6.9% discount to the last close. So what's really interesting is that after the June block, we saw that stock kind of rebounded to 17% to those record highs because the fundamentals didn't change. And it's a case study of how that kind of block trades can create these, short-term pressure, but it kind of offers the opportunity for those yield investors in this instance. So nothing really fundamentally kind of changed from our perspective. So that's why last night when we got the deal, we actively participated in the block trade. And it's even better because it's all about this earnings visibility as well. So if you look at Dalrymple, the terminal is kind of fully contracted on take-or-pay terms through 2028. So which means meaning kind of the miners pay, whether they ship or not across to the but the costs are passed through to the customers, and also the capital spend is reported via these regulated increases as well. So that's a very defensive setup from our perspective. And on the dividend front, for the yield chasing investors out there, the guidance for financial year 26 is 24.5 cents per share, which at these kind of current prices equates to about 6 to 7.4% yield. So for those income investors, that's more than a compelling story than, let's say, BHP, for instance, which is sitting around 5%, and Telstra around close to 3.8%. So when Brookfield kind of sells down, it's not because the business is weak. In our view, it's just the capital rotation. You got to understand that Dalrymple has ran close to about 38% from the high just this year alone. So from our view, fundamental didn't change, and then the yield is very attractive. So we actively participated in this block trade that came through our desk last night, and then even today was up close to 3.5%. So I think it's a good opportunity every time a block trade comes through. Obviously, analyze whether the fundamentals have changed or not. But if not, it's a music to our ears.
Yeah, I can imagine. Let's talk broadly about the big music to our ears globally, which was Oracle. I mean, 36% higher, its biggest one-day jump. It really just shows that the AI game is, far from over or only just beginning, right?
I think so, and then that's obviously well accepted with the current kind of like market that the US is expecting. So as we kind of briefly touched on, we are going to see at least 2 more rate cuts on top of this month rate cut. That's what the market is pricing in, and I think that's very likely. Obviously, very dependent on how the job data comes out this week. But with those rate cuts and this obviously fuel with the AI tensions going on, it is almost inevitable that we're going to see these AI-driven companies do really well. And the government, most importantly, is backing it strongly. So on top of Oracle's jump, it is probably good timing to maybe look at outside of the mega cap companies. Look at the mid cap companies. I think they're the one that's going to be really outperformer over the next 12 months. With this thematic. So that's why even in domestic market, when we saw this rare earth companies doing really well due to that huge investments from the U.S. government in defense into that rare earth company and MP material, that brought a huge impact to a lot of the small to micro cap rare earth companies in Australia. So with these thematics, it's probably a good time to look at the small caps as well.
Yeah, and anything that is on your radar there? I mean, you touched on one before, but anything else?
I think one of the main thing I kind of quite like right now is actually Chinese AI companies, because the Chinese AI companies are, in terms of the broad market, it is in that, still growing market in that, mid cap space. To be honest, I need to do some little bit more digging into that small caps in the US because they're so dominated by the top 5 to top 7. So it's probably a good time to look into it right now, Julia, I think.
Yeah, all right. Jimmy, thank you. As always, Jimmy Zhang there from GBA Capital. And of course, Jimmy touched on Oracle, which was the stock of the day on the call today. And we heard from our experts, Mark Morland from Value 3, Mark Gardner from MPC Markets.
This is big news in terms of validating the data center rollout and the amount of money that's been, because we've all been predicting this Oracle result. I mean, God knows, it was. I mean, I covered this when it came out. We've got it in a leveraged hyperscaling structured investment, and I was pretty damn happy given it's up 35% and we've got quite a decent amount of leverage in it, paired with Google. But it really does validate this hyperscaling of the data centers, the rapid expansion of data centers, big time.
It managed to shift the whole view of the company now. So that what this has done, because they've come up with such a big contract wins and so on, they're now going to be in the hyperscaler category. Where they weren't before. They were sort of one of those other guys that were sort of there, but old company.
All right, but would you buy it now though?
Oh no, it'll come back a bit on. It's not going to just keep going from here. I wouldn't be surprised if it comes back 10 or 15%. But I think yes, and with hindsight, I wish I'd bought it.
Hindsight is a wonderful thing. Let's have a look at the leaders on a down day. And it was all those gold players, Polynovo as well. We mentioned the share buying $52,000 worth of shares there. To the downside today, Boss Energy, of course, on that Honeywell review of its project there. Nine Entertainment, look, it was trading ex-dividend also without rights to a special dividend. So shares hit there. Neuron and Clarity also under pressure, and Perpetual down almost 5%. In the small end of town, these companies on your screen had a great session, and of course, again, some gold players, including Theta Gold Mines, up 17.5%. Cettire in the small end of town was a laggard, down 12.5%, along with Astron and Invictus Energy. Tonight, the ECB rate decision, of course, and CPI for the US for August, really just going to consolidate the rate cut we're expecting next week. Also some earnings from Adobe and Kroger. Tomorrow, Friday, here we have the RBA's Assistant Governor Brad Jones speaking, and a number of companies going ex-div as well to round out the week, including G8 Education and WiseTech. So that will likely weigh on the overall tech space. The overall market has finished weaker by 0.4% to round out Thursday in what has been a very choppy week. It seems like we're down, then up, then down again. The ASX 200 closed lower, by a third of 1%, 8,805, and we are virtually unchanged over the last 5 days due to all this up, down, and down again. And maybe we'll be up tomorrow, hopefully. All right, we'll see you tomorrow from 9:45 a.m. Eastern.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.